Hi everyone, I'm Bill Clarkson with Clarkson Centauro, and this is our weekly real estate update for April the 8th. In this weekly series, we update you on the latest trends that are occurring in our real estate market in San Ramon, using our more than 50 combined years of experience helping clients buy and sell homes. We explain what those trends mean for you as a homeowner or someone looking for a house you will love to call a home. The current inventory is 25 homes, which is up from last week's number of 20. The average asking price of those homes was $1,983,000, which is up from last week's average of $1,894,000. 15 homes asking an average price of $1,859,000 when pending this week. This is more pending homes than last week's number of 11, with a lower average asking price from last week's average of $2,307,000. A total of 19 homes sold this week with an average sales price of $2,136,000. That average price was down from last week's average sales price of $2,167,000. And the total number of sold homes was the same as last week's number of 19. And now for this week's commentary. The most common questions most people ask us is how much longer is this incredible market going to last? In response, this week's episode is the introduction of the key metrics we use to evaluate the market and what direction it is going, plus a grading system of what these key indicators mean. We look closely for clues on how the market numbers are changing, and we don't try to rely upon just one or two sets of data. These following indicators are not inclusive of all the data sets we watch, but they are, in our opinion, the best ones to use and follow. After introducing and explaining each market indicator, I will give it a grade reflecting what that data tells us about the market's direction. Grades will range from A, meaning excellent, indicating the market is getting stronger, to F, meaning the market is struggling and declining. The first indicator is inventory. Our inventory of active homes in San Ramon is only about 50% of the normal amount, as demand is still outstripping the supply. Inventory levels are the most important leading indicator to watch, and if inventory begins to stack up, that will be a warning sign. Right now, I would give this indicator a grade of B+. The next is the market turnover rate. Our market inventory turnover rate, or how often the entire inventory sells and turns over each month, is still doing well. Currently, we are turning our inventory over every 12 days or so. Now, keep in mind, the normal time frame for this is every 30 days. There were times during the last 12 months that our inventory would turn over once every 5 days. I give this indicator today a grade of B+. The third indicator is the amount paid over the asking price by the buyer. This number, the amount of money a buyer is willing to pay over the asking price, has been rising ever since summer and peaked at an all-time high last week of $326,000 above the list price. This 30-day rolling average has never dropped below $130,000 over the last 12 months, a stunning feat that confirms that we are experiencing a spring market for the last 18 months. I give this indicator this week A+. The fourth indicator is the 30-day rolling average of sales prices. This is one of the best measures of how property valuations are changing. To put it in context, the average sales price in 2020 was $1,727,000. This is one of the best measures of how property valuations are changing. To put it in context, the average sales price in 2021 was $1,727,000. The 30-day rolling average on January 1st, 2022 was $1,938,000. We peaked this average over $2.2 million last week, and it stands currently at $2,150,000 today. Property values are still surging, and I give this indicator this week an A+. The fifth indicator that we look at every week is the high-tech stock equities. Our San Ramon market is highly dependent upon the creation of wealth in the Silicon Valley and the high-tech stock market prices that firms that are located there. The majority of buyers in San Ramon are coming from the South Bay, and as long as they're able to sell their expensive homes and have strong portfolios for large down payments, our market will continue to thrive. We track this sector using the Invesco QQQ fund as a quick test of the market strength. It has taken some losses since January 1st, but overall is in good shape, with plenty of appreciation over the last year. I give this indicator a B-. The sixth indicator is interest rates. Interest rates are on the rise, or on the march up, and with inflation reaching levels not seen since the 1970s, there is concern that rates will continue to rise even higher. This will have some impact on our market, and it is of concern. I give this indicator a C-. Let me summarize what our indicators tell us. Inventory, B+. Turnover rate, B+. Our over the asking price, A+. Sales prices, A+. Our high-tech stocks, B-. Interest rates, C-. This week's overall market grade is a solid A-, with a note to keep an eye on high-tech stocks and interest rates. I hope this weekly summary and commentary was helpful. Let me know in the comments below if you have specific questions you would like us to answer about these updates and what the numbers mean for you. And if you find this information helpful, hit the like button and subscribe so you will always be up to date on the latest real estate news in San Ramon. Have a safe weekend, and we will see you next week with a new update.